Mechanical trading and how does it work? Now, mechanical trading is literally using the points that you find on the market to literally trap the market to react to the parameters that you put, or react in a manner where it creates new parameters for you to further trap it. Now, the mistake that we as traders go into is trying to mix our strategies with the mechanical approach to the market. The mechanical approach to the market is for everyone to use. If the market gives 2 points like this on H1, everyone sees those 2 points. And if you put a trend line and wait for the breakout, it will be a viable trade. Now, if you put a trend line and that trend line does not break, the market will certainly and definitely create new points to the downside for you to further pressure the market until a breakout occurs. That is a golden strategy. And that works if you understand the basis of isolating stop losses. One stop loss at a time. Now, the confusion comes when the breakouts occur. Let's say there's 2 breakouts now because we have 2 trend lines. The first breakout occurs and we have our first stop loss. That's your first trade. I don't even know why I'm saying based. Now, the same law affects your trade, that the market is either going to create new points for me to trap it mechanically in order to go to the opposite side, or it's going to keep on moving in my direction. And it moving in your direction is an eventuality to it breaking out the second trend line. So what do? We simply wait. We use our first stop loss as mean regression, because trend lines are derived from regression, 2 points in a linear direction. The best 2 points in a linear direction shows you overall direction for that particular moment, or whatever. I don't really care, but I know how it works. So your stop loss becomes your mean reversion point, or becomes your first mechanical point until the market creates new future structure. Once it starts creating new future structure, then you can connect your trend line again, and now you have an exit for your running buy trade. Now, because this is an aggressive trading strategy, again, understanding strategy, assignment, and assessment. I'm explaining this strategy of mine because this is my fast trading strategy. I'm always going to edit it and put in some perks, but I'm putting it out for myself, for me. I don't know. I'm enjoying this YouTube channel because I'm literally thinking for myself. I'm not thinking of I'm teaching you. I ain't teaching you. I'm doing this for me, for myself. Okay, but yeah, it's basically, it makes me enjoy. It's like I ain't really thinking about no followers, whether people follow or not. I don't care. I'm trying to create something. This is me journaling for myself, and if there are people following, it's pretty cool. But this is for me. So that's why I'm dropping so much information, so much gems. Because even if I try to hide it, like we trade the same thing again. You cannot trade a buy trade that didn't happen. I cannot trade a buy trade that didn't happen. So, So yeah, what I'm basically saying is, this is an aggressive trading strategy from a financial standpoint. Remember, when you do test out strategies, the finance side should always be handled. It should always be handled. It's always the strategy and your account. Your account should always be there. How you interact with your funding in order for you to hit that intended goal. So when I say this is an aggressive trading strategy, because of its pressurous approach of putting market in a trap, it tells me that I'm allowed to take as many trades as possible to grow the account and put trail stops in order to protect the account. Again, as much as you want to make profit, protect the account. The market is not your friend, even if it looks like the most beautiful trade in the world. If it means take those trades, profit for 2 hours and put a trail stop, do that. Because trust me, after 2.5 hours, the market could come down and start selling for 6 years. And you like, that's why we say don't be attached to any trades. Don't be attached to any trades, because real time is what affects real time. You know what I'm saying? So when the market starts selling, you want to interact with it mechanically. Now, the idea of this is that the market is either going to invalidate our stop loss and making us redraw the trend line. Now, this is for the downside, given that, let's say in this situation, the new point was not created from our base of the first regression point. The market just broke out and decided to sell immediately. What do? This becomes, your stop loss becomes a structure, because after the close of the candle, structure is created, and now we have 2 points to the downside, and you have to take that trade to the downside. Now, does that mean that the market won't come back and buy up? It would. That's why you put out parameters, a new trend line. This serves as a breakout, not only as a breakout, as an entry, but it serves as an exit for your sell trade, your buy trade. And that's why you have to be aggressive, and that's why you have to put your trail stops. And that's what I like when I trade. I like the aggressive side of trading. Now, what put me off when it comes to this strategy is the larger frame. We use this on a H1, M30, M15. Yeah, you can use that on those 3 time frames. But what put me off is that when the market moves sideways on larger time frames, it affects the whole system. And I thought about that way too much. And I forgot that. Who cares, bro? Who cares? If it affects it, you don't trade it. You know what I'm saying? So I was like, oh, what am I doing? What am I doing? Why am I trading this? So we're not gonna think about that. So now let's go back to the main topic, which is strategy assessment. Certain strategies don't work with certain account sizes. Certain strategies don't work on specific time frames. So understand the time frame that you're using. Understand the account size you're going to utilize. So whenever you want to set out a strategy, put out a time period to actually test it under those specific conditions. Because you will break your trading plan and you will blow. That's the thing. If you set out a trading plan and you fund, and then you decide to go against it, even if you make money on the first day, that account will blow. If you want to test a strategy, stick to it. Commit to it. Explain how it works under all conditions, under all possible scenarios. How would this strategy react? If I lose, if I win. Remember, your strategy is just for entries. It's just for entries. But it is how the market reacts to your entries. Now, it's easy to fix a mechanical strategy because you're using 2 points that the market creates and market invalidations. But when you're using things like patterns and all that, zones, and it's very hard to lay out what actually happens, because you're no longer using a purely mechanical. You're using a discretionary approach to the market, because reversal patterns and continuations and support and resistance are all a form of a story being told by the market or being told by traders, which is, there is no story. It moves like this because it's 50-50, 50-50, 50-50, 50-50, 50-50. Basically what it is. Can the entire shape help you in the end maybe get a trade? Yes, you can get a trade. But that's not the reason why that trade worked. The reason that trade worked is because every point in the market is a regression point or mean reversion point where it starts off pressure from. And after 2 points, that's why we use trend lines. There's no such thing as we want the most touches on a trend line. 2 touches. In math, they tell you the line of best fit. 2 touches is all it needs. The best 2 touches in a straight line, you want. That's basically what it is. Lastly, I want to talk about collecting information from your surrounding when it comes to trading. There are so many traders out there giving out their limitations to the market and giving out incorrect perspectives about the market. So try to learn from the world. Try to pattern weave each and everything that you learn and incorporate it in trading, because you'll find out there's more to the world and to trading that actually relates than trading itself to trading. You know what I'm saying? I don't know what I'm saying, but yeah, you learn a lot from the world. Try to translate things that you understand from the world to trading. Kind of like I plant. Why? That's an act of responsibility. If my plant dies, if I don't show up, if I don't do what is required, not what I want to do, what is required, I won't win. Same thing with the market. It leads, you follow. So if you don't do what is required, you lose. So all your strategy should be based on what the market requires. Some strategies could be frame focused, meaning on this day. Today, I'm only trading this style today. Tomorrow is a different style. Tomorrow is a different style. Everything is viable in the market as long as you can journal, put it down, trail it, and understand how it works. Deuces.